equity.
Is the media at fault then of referring to private equity as pretty much a frenzy at the moment?
I wouldn't suggest at all that the media is at fault. I wouldn't necessarily call it a frenzy either. It's just something that's come out onto the world stage. It's new and it merits attention. Being away from listed markets, not getting the attention all other asset classes deserve, it is now doing so. It is getting that attention as it should. If anything, my impressions, and certainly some of the information I read overseas, was the international private equity firms, they don't operate in the spotlights of the listed markets. So they're learning to work with the media and to work with public perceptions and so on, and that's an evolving process. I think it's natural and it's very good.
We were speaking about private equity yesterday, and I alluded to a conversation I'd had with Nikki Newton-King, Deputy CEO of the JSE, who said that in her view, one view, is that private equity can be detrimental for local bourses because you see major stocks delisting from those exchanges.
Again, I would suggest, my opinion would be that, it's an additional private equity players, additional players in the market. I think what's going to happen is if prices are attractive and private equity players with capital, and they might be private equity players today, they might be other types of investors tomorrow, they offer good prices to shareholders. It makes sense for shareholders to sell, and there's perhaps nothing wrong with that. Also, another characteristic of private equity is that private equity players often view a listing on the stock market as a very viable and important exit strategy. So the fact that a company is taken off the stock market today does not mean that in some form or other, a few years down the line, it won't reappear in the stock market. But your point is well taken. Depending on the amount of funds that are being targeted at listed companies, it could be a risk.
But there's no doubt that private equities fueled the rally on markets around the world, and really it's because they look at different elements compared with your usual institutional investor. Take us through some of those elements. We often hear, and we heard from Ernest Kaplan earlier, about the gearing element, but surely that's not the only thing that private equity firms look at.
It certainly isn't. You mentioned earlier on that there's companies which are not highly geared, so therefore they could be targets for private equity. I would suggest that the gearing is only one aspect. If you have a sector, I'm not an IT specialist, so don't hold me to it, but a sector which has volatile earnings, which I would think IT companies tend to have, would not necessarily be suitable for gearing. So there's usually a good reason for a particular financial structure. But private equity investors tend to be very good, or professional private equity managers tend to be very good at identifying where management can have strong impact on a company. The best private equity investors, they tend to favor that aspect more than macroeconomic factors affecting the profitability of a company. They would say, look, can we bring in experienced managers, or can we incentivize the existing managers even better to make changes? And these are the kind of things. It's almost a different class of investor, and I think the critical factor is that they always have a long-term outlook. They don't buy in with the idea of selling tomorrow. They buy in with the idea of restructuring, improving things, and doing better in 5 or 7 years' time.
Looking at the African continent, what trends are we seeing in private equity? I mean, we've seen the domestic or the developed markets having particular interests in resources on the continent, and there's obviously a lot of fair game out there.
It's a good question. Again, from a global perspective, I would say that the strongly developed markets are the US buyout markets and the European buyout markets. I think what's receiving a lot of attention right now is Asia and India and China in particular. My impression about Africa is it is a target of specialist funds. And I think that, my impression is that there's probably significant opportunities in Africa simply because there's a lot of attention being paid elsewhere in the world, and there's a lot of growth happening elsewhere in the world. Outside China and India, the primary markets that a lot of people are looking at. So there's still a lot of attention, but it's not as, the attention is not as intense in Africa as Asia, and I think that gives rise to a lot of opportunities still.
To finish off with, anyone looking to set up a business, to sell to private equity, what advice would you have for them?
I think most private equity managers are very open to talking to people. There will be funders available. I think one has to demonstrate a good track record, and ideally, a business model that has proven itself with good prospects and sustainable profitability going forward. The conventional things that the entrepreneur himself or herself would be striving to achieve.
Just very quickly, I know that was almost our final question, but hybrid private equity models where you invest partially in a listing on the domestic market and partially in private equity, are you seeing those kind of trends?
We've seen them on several occasions. I wouldn't necessarily say that that is a dominant trend for going forward. My impressions are that has been the result of trying to accommodate existing listed investors. And again, there's nothing wrong with that. It's the function of the market mechanism.
Ivan Missankov from Momentum, thank you very much for joining us in the studio.
Thank you.
And that brings us to the end of Markets Today. We'll be back in a minute with Business Tonight.